in a time when the economy around the world has been halted, essentially. Oil prices have dropped to unprecedented levels and millions have lost their jobs. But the million-dollar question now is, what does this mean for investors? What does this mean for investments? I'm joined today by two gentlemen from Our Capital, Abraham Cinta and Sergio Camarero. Welcome. Thank you for joining us.
Welcome. Thank you for having us.
So, Our Capital focuses on mergers and acquisitions and wealth management services. You even recently won an award, so congratulations on the award that you won. Our Capital launched in 2015, and you've continued to grow your business in China, in the US, and in Mexico, which of course gives you a unique opportunity to see what COVID-19 and what kind of an effect that has had on not only the two big economic superpowers, but also in Latin America. How do you see investors currently determining asset allocation and the level of risk?
I think that from our perspective, we have seen three blocks or three styles of investors. First, you have those who believe that this is the perfect time to go out there and invest. Those that believe that being at all-time lows, as you were mentioning at the beginning, talking about oil price, some commodities and some stock, this will be the right time to go at it. Those investors out there are the ones that I believe in moving the markets in the last 2-3 months. There's another sector, which is what we've seen some of the bigger and larger groups, that they've been retreating and they literally not investing in anything. They are that type of group that want to wait until they have some more clarity on what's going to happen. And these type of groups are the groups typically funding startups, VCs, even large private equities. And then you have that other third group, which is the people that are switching from going into something that is a little bit more risky in terms of financial products like equities and going into debt. And those are the ones that are seeing that you still want to invest, I still want to invest, I still want to make a return, but rather than doing traditionally with straight equity, I can have something that is a little bit safer.
And can I ask though, is something like age a determining factor when it comes to investment allocation?
Age in China or in what sense?
Well, I think the question is age, are any determining factors, anything that changes how people invest?
I think yes. If you go to the principles behind the investments, someone that has more experience or we call it gray hair, they have seen these cycles in the past, and they tend to be less worried about short-term movements. And for them, it's just a natural process, a natural step. We have seen younger firms and younger managers that are the ones prone to be less risk adverse, that have not seen a global pandemic this level or a financial crisis this level. And if you look at it in the history, you could very well split it between the early 2000s, the internet bubble, the 2007, and now you have 2020. So there is there's a 8 years or 10 years gap in between those crises. So I do believe that more experienced managers or more experienced investors, they are a little more patient and they understand more. Those older, they tend to be more understanding of what's happening and less risk averse.
Of course. Sergio, let me ask you, how has COVID-19 impacted the business?
Well, I think that globally, of course, there is a decrease in internal demand on the countries. Obviously, it's affecting the tourists traveling, so people now they have to reconvert all the traditional meetings. And specifically in our case, we have suffered or we have had a positive impact in our business. I believe it's due to two factors. One is the location. Our headquarters are in Shanghai, China, and there is a lot of cash that Chinese companies need to deploy. So right now they are seeing that the war is a bargain for them. Many companies are struggling and therefore they need cash. So the terms that they can get as an investor or as a buyer are better than a few months ago. So right now is the right moment that they were waiting for to deploy all these cash that they hold in their accounts. So with that said, we had a lot of clients in China, and we have a lot of requests to go or mandates to acquire business overseas. So we have more workload than before the crisis. Our revenue in the first 3-4 months of 2020 is bigger than the whole year in 2019, and we expect a very good year for us.
Very interesting, of course, is in 2019 we could have never imagined where we would be now in 2020. This is obvious. But just for the sake of comparing the two, give me an example of some transactions that you closed in 2019 versus what they look like now.
I think that in 2019 we were, especially towards the end of the year, we were working with a lot of VC stage companies, a lot of tech companies. What we are seeing right now is that if you're not in that tech space that is dedicated to technology, telecommunications, or logistics, the money has completely dried up. So we were from focusing on this to moving to other mandates, more into the capital markets and into those that require perhaps short-term loans, short-term debt, something a little bit shorter term that can get them out of this crisis, and trying to focus a little bit more on the capital markets. Because you have seen, even though the global crisis happened and there was a couple of weeks that were really terrible in the capital markets, it bounced quite quickly. So we continue to push towards the capital markets side.
To complement what Braverman just said, we observed 3 main trends. One is the increasing of the number of SPACs in the US. In NASDAQ, there is a lot of capital floating in the SPACs and going towards the SPAC instead of a traditional IPO. So this is a place where we are very well positioned. Secondly, before we were working more with VCs, PEs. Now we work more with family office. And the third is the infrastructure and energy greenfield project space. A lot of state-owned companies in China, they want to develop projects and to invest in projects overseas, either in solar, hydro, biomass, etc. And they are investing a lot right now. They are looking at, actually, they have KPIs to fulfill, and they don't have good projects to invest. So we are filling them with opportunities all over. And I believe in few months we will see all these results.
What would you say your main revenue streams are? Just to bring it back to our capital, what are your main revenue streams and markets? And how do you compare your strengths and your value proposition with your competitors?
One of our strengths, it's always been the capital markets. And I'm answering this also by comparing or what we do versus others. I believe that here in Asia, and particularly in China, we are one of the few firms that truly have that global aspect of things. Especially now with globalization, everybody traveling, whatever. They can claim that they're truly global, but the fact that we have actual boots on the grounds and that we have a deep understanding of the capital markets, that gives us that edge. And when I speak of capital markets, I want to say capital markets in the US. Obviously, China's in Asia, it's huge space, and each of these countries have their own markets, but something cross-border is really hard to find. And with the capital markets, we've been doing a lot of SPACs, as Sergio was mentioning, and we're seeing a huge increase. There's not that many firms out there with the same level of knowledge and depth that we have. And I think that's considering our big strength on the capital markets. And obviously on the M&A, having boots on the ground in China, it's of a tremendous advantage. Because this is the only country that has truly come up strong from this global pandemic. So as Sergio said before, we are receiving a tremendous amount of deal flow.
How do you foresee the economic situation globally? I mean, with so many jobs being threatened and lost, how do you see this progressing forward? this year and next year?
I think that from Asia, from Asia's point of view, Asia, I think, is a very resilient country. China has proven that that the key to everything being back to normal, in my belief, is I would say is China. The moment China opens up, the moment China starts manufacturing again, it's just a circle that ignites and should permeate towards the rest of the world. But obviously, we've seen what's happening in the U.S. and Europe. That I believe that it's gonna get a little worse before it gets better. I also think that some of the measures that the government is putting in place, all these government aids, could alleviate that. But ultimately, there's gonna be a lot of suffering. And I think that what companies and countries should work to is towards changing those models that are not working anymore and adapting. Anywhere from working at a distance, from technologies that can enhance that social distancing. I just believe it's a cycle that has to happen, and I think if China comes really strong out of this, it's just a cycle that it will pass.
There's a lot of talk of doom and gloom, of course, and that's natural. I mean, with everything that we've talked about, oil prices, jobs, markets getting hit the way that they are. But what about, just to add a little positivity to it, about the potential for opportunity? I want to ask both of you, what do you see as the opportunity for creation of new businesses and new opportunities for investment in the future after this?
I think that from a little positivity, and like I tell Sergio, is it feels like we're living in the future, because in China, we are a month ahead of the rest of the world, I would say, in terms of all of these lockdowns. So we're seeing how the economy is being reactivated. I think there is a new normal. It's not the old ways, it's just different, but we are seeing that what's happening here, we'll see it reflected back into the rest of the world. So on the positive side, it's just a matter of time, I guess. And in terms of new business opportunities, I think everything related to health and fitness, and we're not inventing the wheel. All you need to see is what it's how the market are reacting and what are the big gainers and the big winners of this crisis. And you see it's all these tech companies, everything that has to do with health. People are probably gonna get a little bit more health conscious. So I think there's still a huge room to improve on that side. And I think that's where a lot of companies, if they want to survive, they need to move. Also, transformation of energy sources, like Sergio was mentioning. We're seeing a huge demand of staying away from oil, staying away from those traditional sources into something that is more sustainable. Because the world has seen that one little problem can be terrible for the entire world. So going towards more green, more health conscious, I think that's the next step.
You said the word sustainability, and it kept ringing in the back of my head, because I'm really curious to know. And of course, Sergio, I want to hear your opinion on what was discussed earlier. But is sustainability? Is it still the word? I mean, it was leading into 2020. It's all I could hear about. This is the new decade. Everyone wants to be investing in sustainability. Is that the big word now? Is that continuing to be the big word?
Sustainability and clean tech, I believe, are the fashion words right now. All the countries are talking about an agenda for 2025 or 2030 to transform the global economy towards a more clean, reduce the CO2 emissions, and so on. So there are a lot of patents and technology inventions that they are being adopted by governments, and they want to start to deploy and to, in some way, to finance or to help to finance, because they can provide jobs and they can help to the sustainability of the planet. So this is a new trend that obviously there is a lot of place for investment. Also, as Abraham mentioned, technology space, everything related to delivery, healthcare. The stock market in the US record levels pre-COVID. So right now there is a home run for many biotech companies that I believe they will have the key in the future, not only to prevent the new disease, right, of the 21st century, because I believe this pandemic is only the small part of the iceberg that we can observe. I believe below there are many other issues. So this is a huge opportunity for all these futurist people, no, who have the vision to change the world.
And on the sustainability side, people talk about it, but sometimes they don't mean it. It's just a word, and you have to follow
greenwashing,
that
as we say, right? Greenwashing.
Everybody repeats that, but now that you have seen what can happen when you don't take care of health and the world, you really have to put that into action.
And just an interesting additional question is, you know, you keep mentioning tech, but you say things like biotech, we say medical tech, and so on. Those things will take the forefront. Do you think they'll take the forefront, you know, and other tech companies won't get the attention and won't get, you know, the investment and the time because other companies will supersede them, basically?
And that's absolutely what's happening, and we're seeing right now. Private equities and VCs are changing. They're still doing tech, but they're going towards different kind of tech. With that said, I also see a lot of people trying to take advantage of it, and everybody's changing their business model from where they were before to something with tech. The reality is that it's true. That it's going to be redirected investment. And I also think that some of those players that were in that space before will have the biggest advantage of them all.
And lastly, I just want to ask, do you think that the conversations that we're having now with this pandemic, with this COVID-19 crisis, are these the same conversations that we had after the 2007 financial crisis, or are they different?
I think just back in the day, in 2007, we were talking about, you know, how is it possible that you will create all these hybrid instruments doing mortgages. The difference is that this time you're talking about health, so it becomes a little more serious. You know, people's lives get in danger, but there's always something. And as a world, there's always going to be something. In 7 years, we're going to be talking about something else. But I do believe there's always something going to happen. But clearly, this is the first health crisis that has happened in modern times. Before there were some others, but they never got the attention. Also, you know, internet and everything and media. But you know, hopefully this is the last one health related, because when it's monetary losses, it doesn't really matter. But when you're talking about lives, people's lives, that's what really counts.
And at the end, every crisis is a new opportunity, right, to change and to improve. So I believe it's just a world market behavior correction of the planet, right? So we are very positive about the future, and it starts here with this crisis. Finally, we can all react and people realize.
Okay, great. Abraham, Cinta, thank you so much. Sergio Camarero, thank you so much from our capital. Thank you for joining us.
Thank you
very much.
Thank you.